Yeah, good morning, everyone. So towards the weekend, we saw a strike by US on the nuclear enrichment facility of the Europe, of the Iran at three places. The outcome is not yet uh, clear whether the strike was successful or not. Uh, Apart from that, Israel, Iran is still to take action against this and has not yet has indicated that they will be coming up with countering on these strikes. Uh, so the biggest concern from the world economy point of view is the uh, increase in the price of the oil. And as the Iran can restrict Strait of Hormuz movement of the oil, wherein a lot of oil is getting produced and passes through this strait. Almost around 20% of the world oil is passing through this. And if Iran restricts this, then the prices of the oil can move up. Still, already in the morning, it has moved up. From the early morning, the trade, it's coming off. Uh, so overall Asian markets, because of this fresh increase in geopolitical tensions, has uh, shown a negative trend in the morning trade. And also US futures are also indicating some negative trend. So similar trend can be visible even in Indian market as well, wherein we may find opening bit lower. But as the new scenario develop, then only the market will take the going forward. The movement of the market will depend on that. Market will see some risk of trade happening because of this, and may see some selling happening in smaller and mid cap stock. So need to be careful in smaller and mid cap stock in today's trade. I'll request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. This is Swati. Today, the market is likely to open on a gap down, and we are likely to witness some sideways momentum during a day. Last week, we have seen that the Nifty and the Bank Nifty managed to close. Nifty managed to close above at least 1.5% on the positive side, and Nifty almost 1.5%, which gives some sort of a relief sign. But looking towards the global markets, we believe that we might witness some sort of a selling pressure or the profit booking at the higher levels. Now, on the technical front, today, as we are getting a gap down opening, Nifty has an immediate support at around 25,000 psychological mark. Any momentum below that level will extend this sell-off rally, which might take a Nifty towards to 24,940 to 24,870 levels on the downside. Whereas on high side, 25,200 is acting as a very crucial resistance level, unless and until it doesn't surpasses that level, we are not likely to witness a positive move on the higher side. But if it's break those level, then 25,270, 25,340 levels can be tested on the upper side. Coming towards the bank nifty, the immediate support is placed at around 56,000 levels. Below that level, 55,740, 55,500 can be tested, whereas the resistance is placed at around 56,540, 56,770 levels. The view for today intraday purpose will be a little bit cautious because of the global news and things. Try to avoid the major long positions as long as Nifty doesn't show any kind of reversals from the supports levels. So let the market settle down in the first and half an hours. Then accordingly, we will initiate a call looking towards the market trend. That's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. On the derivative front, on Friday, the markets moved up quite significantly, and we were expecting the same as well. However, over the weekend, as sir also said, there were developments. So yeah, the VIX is likely to increase because of this, and with the open interest now nearing the 2 crore mark. it can be a little dangerous for the markets. However, 25,000 levels holds the highest put base, and until some liquidation comes in there, that will provide good support area. So we will open around that 25,000 levels for Nifty, and if in the first hour it holds on, then in all likelihood the buying should return, and Nifty should again witness some momentum on the upside. However, one has to look at how the other developments play, with the VIX being the most important. If the VIX goes up above the 16, 17 levels, then the fear increases, and it would be best to keep strict stop losses, because once Nifty goes down below the 25,000 levels, we can probably see a further slide up to 24,500 or even lower, because not much put base is seen around 24,500 levels as well. So yeah, look out for the same. From the stock specific front, pharma stocks will witness some sort of buying support. However, some selling pressure can come in oil PSU stocks because of the crude. Apart from that, some autos, after witnessing good buying in the last few trading sessions, can witness some liquidation. So the likes of Hero Motors, Tata Motors, Maruti, all of these stocks can probably witness some selling. So look out for the same. That's it from my side. Like to have the fundamental team to take over, please.
Thank you, Nirav. Good morning, everyone. There is an update from the LT Foods, Eco Pure Specialties Limited, which is a step-down subsidiary of LT Foods, which deals in the import and export of organic and conventional food products. There was an administrative review of countervailing duty order by U.S. Department of Commerce, International Trade Administration, on its organic soybean meal from India. This is for the period of from 1st Jan to 31st December of 2023. The department has applied adverse facts available methodology to Ecopure specialty. As a result, the highest possible countervailing duty rate of 340% has been imposed on its exports to the US. The stock is currently trading at around 25 times to trailing 12 month CPS, and overall this is negative for LT Foods. With respect to the USFDA inspections, recently USFDA concluded inspection at Granules India, Hyderabad API facility, and issued one observation. Granules will respond to the observation within a stipulated time. The seems limited or negligible impact. The stock is currently trading at around 16 times FY27 earnings. Also, Unichem Laboratories API facility at Roha has received 3 observations. This is slightly negative for the stock. Thank you.
Good morning, everyone. Accenture has reported better than street expectation numbers, wherein the revenues grew 8% year on year for the Q3 FY25 quarter for the company. Company has also lifted the bottom end of its full year revenue forecast, now projecting 6 to 7% growth. Earlier, it was 5% to 7% growth. However, on the flip side, the new bookings for the quarter have come in at $19.7 billion, which was a sharp decline of 6% year on year. And company has also signaled slower government spending, which could impact the fourth quarter and annual revenues by around 2%. And the stock reacted heavily on Friday, coming down nearly 7%. So sentimentally, this can have a marginal negative impact for the Indian IT stocks in today's trade. However, most of the Indian IT companies have reiterated that there has been no meaningful negative impact on the demand environment since the 90-day pause on tariff imposition by US admin in early April, and that the growth momentum is likely to continue at least for the BFSI vertical for Indian IT firms. So any sharp decline in stock prices can be an opportunity to accumulate for medium to long term period. That's it from me. Thank you.
Yeah, apart from this, Aditya Birla Lifestyle brand is getting listed today. This is demerged from ABFRL. Now this company will comprise of the key brands wherein the well-established brand is been included in this company. Louis Phillips, Van Heusen, Ellen Solly, and Peter England are the key brand which are well established and running in this company. The growth expectations is around 10% for these brands. Apart from that, some emerging business is also likely to get is been included. That is lifestyle, Venus and innerwear, Reebok, and American Eagle. So the overall growth will not be very exciting. Will be somewhere at around 10-12% per annum, whereas the cash flow generation will be very strong, and company is likely to get debt-free in next 2 to 3 years. The demerged price was somewhere at around the 170 rupees, and we expect the share to get listed around that price only. And outlook from here is more of a neutral for the company. That's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So in today's session, one can initiate a buy on dip strategy in gold. One can buy around 98, 900 to 98, 800 levels and maintain a stop loss of 98, 450. On upside again, 99, 400, 99, 700 are the levels where one can book profits. And similarly, silver one can initiate a buy around 1 lakh 6,000 and maintain a stop loss of 1 lakh 5,000. On upside, 1 lakh 7,000, 8,000 are the levels where one should take profits. And in metals too, copper looks good. One can buy on dips around 877, 76 levels and maintain a stop loss of 872. On upside again, 885 are the levels where one should take profits. If prices sustains above 885, then we might see further rally in the counter. Wherein zinc also one can initiate a buy with a stop loss of 251 and upside expecting 255, 56 levels. And crude oil expected to open gap up. One can buy on dips around 64.70 with a stop loss of 6400. On upside expected to test 6600. And in natural gas, prices had corrected yeah, on Friday. So a pullback is expected, whereby again sell around 342 with a stop loss of 352. And downside, it is expected to test 330, 320 levels. So that's it from us. Thank you very much.